Development here in Iowa. Here with me is Mary Beth Juergens. She is the Housing Programs Director here as well. So we're just trying to give everyone a refresher, or if you've never heard anything in regards to our agency and some of the programs we offer, give you a new rundown on some of the programs and a lot of the updates that we currently have within a lot of those programs. Michelle, do you want me to kick off the presentation, or?
Yeah, that'd be great. I had a little bit of a glitch there where I didn't hear you. My Wi-Fi's been great for 2 weeks of virtual training. And of course, it feels like today's the day that it just doesn't want to cooperate. So that'd be awesome if you'd go ahead. And I know you've got a presentation to share as well. So we appreciate that.
Yeah. So as I said, I'm here with the USDA Rural Development, and our state director is Grant Mankey. He's in charge of the 70 plus employees we have throughout the state. Brief history of us: established in 1862 by President Lincoln. Our mission is to provide leadership on food, agricultural, natural resources, rural development, nutrition, and related issues based on sound public policy, the best available science, and efficient management. We support the American ag economy to strengthen rural communities, protect and conserve natural resources, provide a safe, sufficient, and nutritious food supply for the American people. And the department's wide range of programs and responsibility touches the lives of every American every day. So we are one of just 8 mission areas, as you can see here, and we're one of the only ones that puts a major focus into rural development. Within USDA Rural Development, we have a multitude of programs, and within the housing section, it is the same. So we have single-family housing direct loans. We have single-family housing loan guarantees, housing repair loans and grants, technical assistant grants, rental housing direct loans, rental housing loan guarantees, housing preservation grants, farm labor housing loans and grants, community facilities loans and grants, and rural community development initiatives. And to the side there is the different rundowns of what the main purpose of that program is, who's eligible to apply, the uses, our different thresholds that we have for each population, and then whether it's a loan, a guarantee, or a direct loan, and then the various terms and conditions. And we can provide that as well in a larger format if anyone would need that. For individuals, our single-family housing direct loans, we have low-interest fixed-rate home ownership loans that are provided to qualified persons directly by USDA Rural Development. Financing is also offered at fixed rates in terms through a loan from a private financial institution and guaranteed by USDA Rural Development for qualified persons. Neither one of those home loan programs require down payment. For the multifamily housing rental assistance, individuals or family benefits from these programs providing payments to owners of USDA financed rural rental housing or farm labor housing projects on behalf of low-income tenants unable to pay their full rent. For our single-family housing guaranteed program, we have 100% financing up to the appraised value plus the 1% guarantee fee. We have 90% guarantee to the lender. It may include closing costs, repairs, 1% upfront fee in the loan. There's no purchase price limits, no monthly mortgage insurance, flexible ratios, fixed 30-year interest rate and loan term, no reserves required. Non-traditional credit may substitute for lack of traditional credit history. The eligible gift grant MCC's buy downs are allowed. No cash contribution or cash reserves required from the applicant, and it's not limited to first-time home buyers. For the eligibility, it's to provide a stable and dependable income for repayment ability with ratios of 29 and 41%. Have a credit history that indicates a willingness to meet obligations as they become due. 2 qualifying credit lines required. A 12-month history does not have to be open. Have an adjusted household income that is within rural development guidelines. Based on the number of persons who will occupy the home and county where they live, household income restricted to 115% of county median household income, and a purchase a residential property that is located in a rural development eligible area. And we have the hyperlink attached for which areas are within that region. For the housing requirements, it is single family only, detached, attached, condo, PUD, or modular. The house must meet requirements of HUD's 4000.1 handbook. Existing home or new construction, there are no acreage limits, no income producing buildings or land, must have direct and all-weather road access. Water test is required on properties with wells. Crawl spaces must be accessible, may loan on manufactured homes that were built from January 1st, 2006 or newer and on a permanent foundation, and no new construction in floodplains. Our website provides all major programs that we offer. It shows the income limits, of which we recently had some limit increases just as of yesterday that jumped up for the 504 guaranteed income limits and then the 502 direct. And I'll discuss those a little bit more in detail further on here. We have adjusted income calculator on there as well, and then the map details of the eligible and ineligible areas. For the single housing items that need to be submitted to us are the Form RD 3555-21, the request for single family housing loan guarantee, the application signed by the applicants, lender's transmittal summary, credit report, tax transcripts, appraisal report, dwelling certification, if not FHA roster appraiser, verification of income, and the purchase agreement, along with standard flood hazard determination. For the guaranteed underwriting system, Rural Development's online automated underwriting system provides quick, consistent answers. We accept eligible files needed are the RD Form 3555-21 appraisal, flood certificate, and stacking order checklist, as well as online training available. Application processing flow, the lender originates the loan and underwrites it. Package uploaded to RD. GUS finalized. RD issues conditional commitment electronically. The lender closes the loan, uploads closing documents to RD, and pays upfront fee electronically. And RD issues the loan note guarantee electronically. Recent updates are the elimination of the rate cap. Student loan income-based repayment utilizes 0.5% of balance for ratios. GUS accept loans do not require credit score validation, and they accept loans no longer require a downgrade for new debts. And the tolerance threshold of $50 for increases in debt after conditional commitment. For single close construction, it's construction to permanent loan financing. There's a lot of aging, dilapidated housing stock in rural areas and a lack of affordable housing. The new single close feature is designed to help alleviate a lot of these issues. The agency issues the loan guarantee immediately at the first closing before the house is built. Lenders benefit in that they are protected during construction by the guarantee. Builders benefit in that they don't have to put up their own capital for the construction. And realtors benefit in that they get paid before the house is even built, which, as for most of you, is a rare occurrence. The buyers benefit in that they are given an interest reserve that can be established from loan funds to cover the interest payments during construction. And it's very affordable that the buyer does not have to pay both their rent payment and construction loan interest payment during the construction. A contingency reserve can be established from loan funds to cover cost overruns. For example, if the builder runs out of flooring material, the cost can be paid from the contingency reserve and the buyer doesn't have to dig up the money on their own. If there are contingency reserve funds left over toward the end of construction, the borrower can then choose to upgrade kitchen cabinets or other items within the home. Again, it's something that we kind of give some flexibility on and makes it a little bit more affordable. Telework opportunities. If someone has to move back to Iowa to take care of an elderly parent and there's only dilapidated housing available using this single close, a person could have a brand new telework ready home. Owners of new construction have less maintenance concerns than buyers of older homes. The roof is good for at least 20 years, appliances are all new, and many other things along those lines. The maintenance benefit also represent a better credit risk for the lender and the agency. For our single family housing direct program, the 502, we have 100% financing, no down payment required unless over the non-retirement asset limit. For non-elderly household limit, that's going to be 15,000, and for the elderly household limit, that'll be 20,000. The fixed loan term of 33 or 38 years, maximum mortgage limit of 265,400 is our statewide limit that was increased as of January 31st of this year. The interest rates are established monthly, and it's a fixed rate once the loan is closed. For the payment assistance subsidy, it may reduce effective interest rate to as low as 1%. It reduces the eligible applicant's required monthly payment. Based upon household income, assistance may be requested if financial situations change and subject to recapture. If property is sold, the owner transfers the title or it's no longer occupied, and once the loan is paid in full. The recapture points to remember would be the family's original equity plus a return on that equity is always protected from recapture. If the house has no value appreciation, the family pays no subsidy recapture, and the highest recapture level is 50%, which means the most a family will ever pay is 50% of the appreciation of the home, or the total subsidy granted, whichever is less. The direct loan benefits is that some closing costs may be included above the appraised value. There's no private mortgage insurance required. Real estate taxes and insurance are escrowed. It's not limited to first-time home buyers. Partner with other funding sources, and no penalty if paid off early. The eligible loan purposes are to construct or purchase a new dwelling, custom stick-built, modular, or manufactured, purchase an existing dwelling, repairs, relocation of a dwelling, purchase and installation of essential appliances as long as supported by the appraisal, and special design features or necessary disability equipment. Fees and related costs, the closing costs $2,000 to $3,000 average, credit report fee $25, appraisal fee $475, tax service fee $79, initial escrow deposit 2-month cushion, home buyer education course $75, inspection fee, home inspection of greater than 500, and termite of $75 to $100, and first year homeowners insurance premium, as well as legal attorney fees. And all of those with the mark to ask for can be loaned above the appraised value if needed. For the loan restrictions, furniture or personal property, in-ground swimming pools, acreages that can be subdivided, existing manufactured homes if constructed prior to January 1st of 2006, homes that have a market value in excess of $265,400, cannot include farm service buildings, but storage sheds are okay. The income producing property, home-based operations are okay. And commissions, finder's fees, homeowners association fees, or placement fees. The property eligibility is a single family dwelling existing home must be structurally sound and functionally adequate. Modest in size, the site must not be large enough to be subdivided. The value of the site should not exceed 30% of the as improved market value of the property and meet the standard square footage consideration of 2,000 square feet. Not located in a floodplain, look at alternative sites or will need to have flood insurance. For manufactured homes, the structure built to meet federally manufactured home construction and state and safety standards and agency thermal performance standards. Brand new units, existing units constructed on or after January 1st, 2006. A permanent foundation, maximum 30-year loan term, approved dealer contractor required, and minimum 400 square feet. For condominiums, each unit owner has title to a unit and undivided interest in the common areas. May include dwelling units in detached, semi-detached, row, garden type, low or high-rise structures. Project must be approved for financing by HUD, Fannie Mae, Freddie Mac, the VA, or the State Housing Finance Agency. Documentation must be provided showing project is acceptable. At least 70% of the units have been sold. No more than 15% of the unit owners are 1 month delinquent in payment of homeowners association dues. The project consists of a structure containing 4 or more units and does not contain any commercial space. For townhomes, duplexes, individual dwelling on its own parcel, taxed separately, must provide a shared wall agreement. If located in a planned unit development, need copy of articles and bylaws or other regulations of the HOA, and you can't rent out the other side. The applicant eligibility is a U.S. citizen or legal immigrant, income eligible, acceptable credit history, able to show repayment ability, fall within ratio limits, eligible property in an eligible area, not own another home at the time of loan closing, must agree to occupy the property as their primary residence and not be suspended or debarred from participation in federal programs. For the income analysis for the annual income, income from all adult earning household members used as the base for computing the adjusted income. For adjusted annual income used to determine whether an applicant is income eligible and used to determine if applicant is eligible for payment assistance. It provides deductions to account for varying household circumstances and expenses. And repayment income based only on the income attributable to the parties of the note. Adjusted annual income dependent deduction of $480 per dependent who are not the borrower, co-borrower, or spouse age 17 or younger, individual with a disability, or full-time student. Child care expenses, reasonable unreimbursed expenses for the care of children aged 12 and under that allow a household member to work, actively seek employment, or go to school. No other adult household member is available to care for them. Expenses deducted do not exceed the income earned by that household member. Elderly household deduction of $400, party to the note in 62 years of age or older, individual with a disability. And deduction for medical expenses in elderly households only. Medical expenses not reimbursed by insurance or another source and are in excess of 3% of annual income when combined with any other disability assistance expenses. For the Iowa income limits based on family size and county, where applicants want to purchase 502 direct income limits are banded of 1 to 4 persons and 5 to 8 person households. And this is where we did have a recent increase that was quite notable, and we can provide those to you if you'd be interested. For the Iowa eligibility assessment, applicants can input their personal information into this eligibility assessment to obtain an initial review of their eligibility. And for the credit analysis, applicants must demonstrate a reasonable ability and willingness to repay agency loan. Each applicant looked at separately. A a reliable credit score of 640 or higher, has 2 trade lines that have been open and active for at least 12 months within the past 24 months, no outstanding federal judgments, and no significant delinquency. If reliable, we can look past other indicators of unacceptable credit. And for the repayment ratio analysis, the principal interest tax insurance, 29% for very low income applicants and 33% low income applicants. The total debt, to include the PITI, is 41% of all applicants. The home inspection, state licensed inspector or a qualified independent third-party inspector who can provide the necessary certifications can be a member of one of the 2 professional associations, the American Association of Home Inspectors or the National Association of Certified Home Inspectors. Home buyer education, mandatory for first-time home buyers, if owned within the last 3 years, not required. Must use approved use approved provider of eHome America at $75. Framework also $75, and Utah State University is $60 for the applicant and $5 for the co-applicant. And provide the certification of completion prior to closing. 502 direct processing in Iowa is centralized 502 program in April of 2014. There's a team of 12 dedicated only to processing the 502 direct loans, and they cover the entire state of Iowa. It's a streamlined process, paperless. We have improved customer service due to that and increased efficiencies along with improved processing timeframes, and it makes it a lot easier to communicate with our staff, along with applications are assigned on a rotation basis once we receive them. And to the right there is all of our contact information. For the single family housing repair program, or 504, it's to assist very low income homeowners make repairs to their home, and it must be owner occupied and applicant's primary residence. The property must be typical and modest for the area, not be used for rental or other income producing purposes, not have an in-ground swimming pool, not have an estimated or appraised value in excess of $265,400, non-retirement asset limits in excess of $15,000 for non-elderly and $20,000 for elderly, and must be used to reduce a 504 request. There is no application fee. For the pilot program that we here in the state of Iowa are in, we have a maximum loan limit of $40,000. Loans of $25,000 or less require a closing by title insurance company or closing agent, as improved appraisals required for all secured indebtedness of $25,000. And loans of $7,500 require a promissory note only, and escrow for taxes and insurance is required for loans greater than $15,000. 504 repair loan program, make a dwelling decent, safe, and sanitary, to remove health and safety hazards, improve or modernize a home as long as dwelling remains modest. Here's an example of a repair type that we could make with this program. And how can the funds be used? For insulation, to add a ramp or handrail, replace or repair things such as storm doors, windows, roof, structural support, electrical, plumbing, furnace, steps, stoops, water, and sewer systems. And who qualifies for the 504s? It's based on adjusted household income, must not exceed very low income limit, lack personal resources to pay for needed repairs, must have reliable income sufficient to allow repayment of a loan, and repayment ability based on TD, total debt ratio not to exceed 46%. Applicants with a credit score of 620 or higher are considered to have acceptable credit history unless evidence of a significant delinquency. And the terms of loans, interest rate of 1%, standard loan term of 20 years, $40,000 loan outstanding at one time, and a minimum loan amount of $1,000 is required for all initial borrowers. For the repair grant, grants are made under these two circumstances only, and that is to remove health and safety hazards or to repair or remodel a dwelling to make it more accessible and usable for a household member with a disability. And again, we have an example here showing an improvement made through this program. Who qualifies? You must be at least one applicant who is 62 or older. The adjusted household income must not exceed the grant income limit. Unable to repay the loan. Credit reports not pulled for grant applicants. And depending on applicant's adjusted income and total debt ratio, applicant may qualify for a 504 combo with the loan and grant. The terms, it's 100% forgiven after 3 years. If the home is sold within 3 years of grant approval, the full amount of the grant must be repaid. There is a $10,000 lifetime maximum. There is no minimum grant requirement and no application or closing costs involved. Again, here's another example of one of our projects that we replaced the stairs to make them safer. For our FY20 allocations, we provided over $230 million for the 502, over $9 million for the 502 direct, over $300,000 for the 504 loan, and over $320,000 for the 504 grant. But we still, as noted there, have plenty of money available. And there is Mary Beth, and I can certainly provide mine for anyone who would like to hear about any other programs we have to offer beyond the housing side, but I know that this is the primary, so that is all I have to present. Mary Beth can certainly speak to anything that is a big highlight right now with our program, anything that I didn't cover or may have misquoted.
And I'm wondering, we have some questions as well, because I'm going to bet somebody like Barry probably has a few questions for this one. I think you're on mute, Barry.
I have a question. Can you hear me?
Go ahead, Jacqueline.
Great. I heard that the credit score was being raised because of COVID. Is that true? The required credit score is no longer going to be 640, it's going to be 680?
Rural Development has not changed our credit score requirements at this time.
Okay. Thank you.
I've got a question for you. What are some of the biggest misconceptions that people have with those USDA loans?
Matt, do you want me to take that?
Please.
So number one is that they have to buy the worst house on the block. You know, we can loan up to $265,400 on our direct program. Our guaranteed program, there's no limit. It's all based on their ratios. So applicants can actually buy a really nice house, build a brand new house, and be eligible for our program with a 0% down. And our interest rate on the direct program right now is 2.75%. That's the lowest it's ever been. We can subsidize that down to 1%. Our guaranteed program, the lender sets the interest rate, but again, it's a competitive interest rate, no down payment, no PMI. So I think the misconceptions is that it's only for someone who has terrible credit, which isn't true. You know, we like to work with people with good credit. We want to be repaid as well. So, and that the houses are small, junky, that type of thing. And that's not the case at all. We are in towns less than 20,000 in population, so the metro area is not eligible. But the smaller towns, Polk City, Bondurant, Ullman, and the Indianola, Carlisle, all of those are eligible.
So I do have one.
Go ahead, Barry.
What about berm homes? I didn't note. Is that a exception or acceptable?
As long as it meets on the guaranteed program, it has to meet HUD 4000.1 guidelines. So as long as it meets those lines on the guaranteed program, it's okay. The problem we have with a berm home is finding comparable sales that would support the value of the property. So I'm not saying that it's not eligible, but we haven't loaned on one recently. So to find a comparable might be challenging.
What about wood foundations?
Yeah, wood foundations can be approved.
Those are my two questions.
Great, thanks.
Only 2 for Barry. That seems low for you.
I had a quick question. I had to step out for a second, so I may have missed it. But as far as you can't loan on like income producing land, so if there's farmland attached to a property, are you not able to loan on that then, or how does that work?
Yeah, that's correct. If there is an acreage and there's income producing farm ground attached to that acreage, it would have to be subdivided off. We could loan on the purchase of the home, but the farm ground could not be included.
Gotcha. Thank you.
Mm-hmm.
So one more question. When you do rural property, do you have to do surveys?
Yes, so either a survey or title guarantee, depending on like our definition of rural is towns less than 20,000 in population. So I'm assuming you're meaning rural, meaning out in the country, or
I guess I'm thinking something not platted.
yeah. So yes, we need a survey so we can have the appropriate
Legal description.
so forth, or title guarantee. Sometimes if we use title guarantee, like on an existing house, for instance, maybe in a community that, the lots are already there, then we don't require a survey at that point. But if it's brand new construction, yes, require a survey.
Thank you.
Mm-hmm.
Who else has questions? Did we mention how quickly are those closings happening right now?
So I'll start with the guaranteed program. Back in January, we transitioned into a national delivery system for the guaranteed program. So that's all handled nationally. We don't process those here in Iowa. So their turn time from the time the lender submits the complete application, which is the appraisal, all the underwriting documents and so forth, their turn time is anywhere from 2 days to 4 days generally. On the direct side of things, from the time someone submits their application till when we determine eligibility is usually 30 days or less. And then it just depends on when they submit a purchase offer, we can obligate subject to an appraisal. So we can obligate that funding, have the money set aside for them as soon as we get that house inspection, we get the full house inspection. So we know what kind of repairs are needed, if any. We'll go ahead and obligate, and then time it takes to get the appraisal back and so forth. Sometimes that's an additional 30 to 60 days, depending on getting the appraisal back and then scheduling closing and all the disclosures and things. So from start to finish, if someone walked in today, submitted their application with a purchase offer, 60 to 90 days probably.
That's a good number to know.
Mm-hmm.
I'm curious with the agents that we have on, have you ever have any of you agents used USDA for new construction yet?
No, I haven't.
I'm seeing heads shaking.
No, I haven't either. I did have a question about the repairs for like USDA loans. Is it similar to a FHA loan or VA where they look for certain things during the appraisal, so such as like paint chips or safety hazards?
Yes, that's correct. So on the guaranteed side of things, the property has to meet HUD guidelines. So if the appraiser notes chipping paint or, something like that, then it would have to be fixed, and we can loan for those repairs along with the purchase price. On the direct side of things, we get a full house inspection. So between what the inspector says and the applicant and us, we kind of all look to see what exactly we would require be done. We'll require anything that's a health or safety hazard. We don't require cosmetic things be fixed. We allow the families to do that on their own. Generally, they can paint their own bedrooms and things like that if they choose to. But all of those repairs can be included in the loan amount as long as the house appraises enough to cover this price plus the repairs.
Okay, so then the repairs can be done after closing.
Yes.
Correct.
Mm-hmm.
Okay. And they would just need to like get the bids prior to closing.
Correct.
Okay. Okay.
Yeah. And on the direct side of things, they get the bids before we order the appraisal. So we submit those along with our appraisal request to the appraiser and request an as improved value.
Okay. That makes sense. Thank you.
Mm-hmm. Has anybody used real development just for an existing home? Good.
I think I saw Barry nodding yes.
I have, but it's been a while.
Jacqueline, I see a thumbs up. Danielle, how about you? Have you used it? She chatted, I have. It feels like the process has improved over what I think some agents have used previously, which is good.
Mm-hmm. That's what I was going to say too. When you talked about the misconceptions, is that there's a lot of extra paperwork and time involved, and that's not the case at all. I mean, we do everything we can to make it a seamless process for all of you, and so you can get to closing as quickly as possible.
Well, and I see we talk about the Metro, but I'm looking at the group that's here. I know Aisha's in Polk City. Tony and Jacqueline are out of Ankeny. So, we're very close to areas that can use it, or in areas that can use it all the time. Not Ankeny proper.
That's good. And I was just going to share with you the income limits, as Matt mentioned, that increase, just to give you an idea what those are in the metro area or in Polk County and so forth. So 1 second here. So this is for the guaranteed program. 1 to 4 person household can make up to $102,550, and a 5 to 8 person household can make $135,350. So sometimes another misconception is that people have to be very low income in order to qualify, and those income limits are one household person can make quite a bit of money and still be eligible for that loan. And then on the direct side, income for a 1 to 4 person household is $71,350, and 5 to 8 is $94,200. just to give you an idea. And that's adjusted income. So we take total income in the household, subtract our $480 per minor child, plus daycare expenses. So that's the figure that needs to be below that limit.
Yeah, that childcare expense can really make a big difference.
Right, right.
What other questions do we have? Tony, anything else since you're so close in the rural area?
No, I pretty much everything I had questions about was answered either in the presentation or afterwards. So I'm good. Appreciate it.
Now, are all lenders doing USDA loans, or what is that process? How do we find USDA lenders?
Yeah, that's a good question. Not every lender is an approved lender, but the majority of lenders are, or they work with Iowa Bankers, and Iowa Bankers is approved, and so it's through them. But I would encourage your applicants to contact their local lender first if they are interested in the guaranteed loan, to see if they're eligible, or if they're an approved lender. If not, they can become one. It's not very hard to become an approved lender, or they can go to like the big banks, Wells Fargo, US Bank, all of those, as well as many smaller banks as well. And there's a list on our website that they can go to find those eligible lenders.
Any other questions? Anything else, Mary Beth or Matthew, you wanted to touch on?
Well, we sure appreciate the opportunity.
Wonderful. And so appreciate the two of you coming on and just talking through that program again. I think we kind of forget about it a little bit. And, some great value, some really great value, especially, I think, especially with those first-time home buyers, but it's good to know it's not just for first-timers, to help get a few more people into homes. So great information. We really appreciate your time, and we've got it recorded. So we'll share it with more of our agents and hopefully get a little bit more going with you all as far as those programs. So we appreciate you. Thank you so much. And we'll see everybody.
Yeah, thank you.
Michelle. Thank you, everyone.
Thanks.
Bye-bye.
See ya.